Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Tuesday morning, July 23rd, with your grain market morning commentary. Currently, we're in between sessions, but in the overnight, the electronic grains went out. Corn 6 to 7 cents lower. Soybeans in the old crop down 5 to 6 cents. In the new crop, just steady. In the wheat, we're about 4 cents lower. So that's where we would look to open up when trading resumes. This Friday, August option expiration in the grains, and next week, July 31st, is first notice day for the August futures contract. So keep that in mind when you're trading these August contracts. Yesterday, we got the weekly crop progress report, the update on the condition of the crops, and soybeans came in 64% good to excellent. That was about in line with expectations. However, that is above the 10 to 20 year average, which is closer to 59 or 60% rated good to excellent for this time of year, way above where we were just a year ago. So what's the story with soybeans? We saw a big rally in the market yesterday, 35 cent rally, and today, being 5 or 6 cents lower is not a big deal. But the story here is that we have extremely tight supply. Many of the producers that I talk to out there say none of the elevators have any grain out there. Farmers that are holding on to it are going to be tight-fisted until prices move higher or until they get a better idea on what their new crop supply is going to be like. It's difficult to let go of what you have until you know what you're going to get. So that's the story with the soybeans. We're looking at an old crop, new crop spread there now, which is the August contract against the November contract, trading about $2.27. Just 2 weeks ago when the July contract went off, that spread was closer to $3.10. So we would expect that we continue to see some very good demand on this old crop, which is quickly running out of time. But again, it's extremely tight. That spread could still get wider there. But something else that I want to point out that I think is very interesting is the spread between the new crop beans versus new crop corn. December corn is currently trading very close to $4.90. And we have the new crop beans around $12.85. So we're looking at a spread there that's almost $8 wide between new crop beans, new crop corn. Something's out of whack there. That's just not right. Normally, what we have is a ratio of 2 to 2.5. So let's say if you take the price of corn, multiply by 2.25, that should give you the typical price of soybeans. So we're way out of whack here. It's over 2.5 corn to get to the price of soybeans. What I'm saying is there's something interesting developing here. We'll keep an eye on that, and there's more to talk about there. I would expect that wheat continues to follow corn. However, at these prices, close to $6.50 in the wheat is starting to buy back demand. We're very competitive on the global market now. However, our corn at $4.90 is still very expensive. So I would expect at some point wheat starts to outperform corn. And, that's something else to keep an eye on. I'm always talking about the corn and wheat spread. That is something you should keep an eye on. The price of wheat and corn is just too close together. So there's much more to talk about, but this is all I have time for now. Please feel free to give me a call or shoot me an email. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.